In this video, we're going to talk about identifying double bottom bases, how to know if they're good, and how to know how to see if you should go and play them. So there's really two things that we want to look for, two main things, and that's going to be the structure of the pattern and is there more supply or more demand within that pattern. And then this breaks down into 5 things overall. So we're going to look at the overall length of the pattern, the overall depth of the pattern, where the breakout is, and then try to analyze the behavior of the price action within the base, and then based on all that, look at the weekly bars and see, is there more supply or is there more demand? Let's go through each of these. So I have 2 examples for you today. The first one is going to be in Netflix. The next one is going to be in Google. Now let's take a look at both the daily and the weekly chart of Netflix first. So we have that here, and I haven't marked up the chart yet, but I want to see if maybe you are able to identify where the double bottom is first. Now a double bottom it basically looks like a W, where you have a dip and then it starts to come up and then it dips again and it undercuts that first leg and then it starts to rally. Take a look at this chart before we annotate it and see if you are able to identify where any potential double bottoms are, and pause the video and come right back to it. Okay, so here is where I see the double bottom. On the weekly chart, I see it right over here. Right, and let's try to draw this if this tool actually works. Okay, so we have this right here. This is going to be the first leg of the double bottom, and then here's that second leg where it undercuts that first one, and then it starts to rally. Right, so that's right there. It starts to consolidate, tries to rally, undercuts that low, and then rallies thereafter. That is this move right over here. It actually looks a little bit clearer on that daily chart, that W pattern. And so what we're looking for in that double bottom, you want to see the undercut of this first leg here. Let me just blow up the weekly chart. It's important to see that undercut because you're starting to shake out the weaker holders, right? So anybody that say bought down here and they're holding and now they're waiting for, they see that that Netflix broke below the 50-day moving average, it reversed and closed higher. Okay, now let's raise our stop to just below this low over here, ends up getting undercut, and then those last weak hands end up getting shaken out, and the rest of the base is able to form and move on. It doesn't always work out that way, but that's what we see here. Now that doesn't mean that if you are somebody that bought way back here that you were wrong for selling over here. It all has to do with how we're managing risk and truly accepting risk, and it's always going to be more about managing risk for ourselves and the time frame and the overall strategy of our own portfolio versus only looking at what is a technical signal. Risk management always comes first, in my opinion. But anyway, back to this. So double bottom bases are typically about 7 weeks long, and they typically correct anywhere in the neighborhood of about 20% to about 35%. So over here we have 1, 2, 3, 4, 5, 6, and breaks out on that 7th week. And the breakout is really over here, right? And that's when it poked its nose above it over here, but it really started to take off over there. So You have 7 weeks, arguably 6 weeks, but it's good enough. Then you look at the depth. And the depth of this one was about 15%. So this one had ended up being a little shallow. And your breakout point of the double bottom is going to be that middle point of the W. So in this case, it would have been a break right at 159.97, or you would really look to buy a little bit higher than that, so around like 160, 160, 10, and you get that breakout over here. Now, if you're looking for an advanced pivot, the way to do that would be to draw a descending trend line from the top and look to enter on a breakout above that descending trend line. And you would look at that more so on a daily chart than only looking for the advanced pivot on the weekly chart. And just because it'll be a lot easier to pinpoint the exact pivot. So let's take a look at the daily chart. So over here, you're probably buying right as it's breaking above that 50-day moving average. Yeah, just right above the 50-day moving average, because you would look at this for the advanced pivot, and one thing that you would end up seeing is that you're just getting to this descending trend line. You'd want to buy on a break above it, but you might get resistance at the 50-day moving average, so just above the 50-day moving average would be good, and so you would probably look to get in there. You're also dealing with earnings only a few days away, and so a lot of people ask, well, how do you deal with that? We have a whole nother video on how to deal with earnings as a blog post as well. I'll link that down here. Won't go into it too deeply, but because it came up, you basically would have a staggered stop or a bracketed stop where you would have look to exit at different points, so that way you're getting out quickly and you're not risking everything on this, and you would be able to survive a gap down move below this low over here. So if you're buying at that breakout, you would have to sit through about 8%. So that's about the most that I like to risk on a position, but you could start to scale out a little bit at break even, or a little bit over here if you wanted to try to survive a breakout or survive a gap down. You could do either of those things. And so you have the double bottom, and you know where the breakout points are. Now you want to see like how the behavior is in the space. So let's take a look at that weekly chart again, and you see that it's starting to consolidate over here. Volume is elevated on that, and then you start to rally, right? Like you have this other week that's down. It's a down week, but you end up reversing off the low and closing in the middle of the range. So that's a sign that there's still demand. Even though it ends up getting undercut later on, there's still demand on that week. And so we're looking at the base as a whole. So there's 1 week of accumulation in this base. Then over here, that's a distribution week. And then over here, and it's a distribution week because volume is greater than the week before, and it also closed near the lows for the week. That's the distribution week. Then this week over here ends up being an accumulation week because its volume was greater than the week before it. And you could also see that it closed near the top of its range. So overall, more accumulation than distribution in the base. And to look at the behavior around the moving averages, I thought that this was interesting on the weekly chart, how you're kind of getting support around that 100-day moving average, then it loses support at that 100-day moving average, regains it, and then it's starting to break out, and you could see the volume on the day where it retook that descending trend line and the 50-day moving average. You could see that that's above average volume there as well. So that was a breakout, and the way that you would have played this is what we said before. So that's Netflix. Let's take a look at Google. Now let's take a look at Google. Here is the daily and the weekly chart of Google. And I haven't marked up this one yet either, so take a second and see if you could find the double bottom on either the daily chart or the weekly chart or both. Pause the video, see if you're able to find it. Okay, now here's what I'm seeing. Let's take a look at the weekly chart first, and let's make this a little bit bigger. First thing that I'm seeing as a double bottom is this over here, right? So let's make this a little clearer. And you could kind of see the double bottom form right there, right? And you might be asking yourself, well, why isn't this over here the double bottom? And the answer is that it kind of is also a double bottom, right? If you look at this, it has the essence of a double bottom. Well, let's draw this, and let's make this slightly different. Change up the style a bit. Maybe make this one, how do I make this heavier? Here we go. Okay, so let's say you're looking at this. And as that's the double bottom, right? You could look at it either way. There isn't a true right or wrong in doing it. It's more about like having the essence of the pattern. It's always about figuring out if there is more supply or demand in who's going to win the day, the bulls or the bears. And that's what these consolidation patterns are about. And it's really just buyers meeting sellers, and that's why you get this choppiness. And we're just trying to figure out which way has more of a probability of happening, continuing higher or continuing lower. And so you could look at a pattern like this and you could make an argument, oh, well, it has this up here, so that it's not a valid double bottom. Well, the larger pattern is the essence of the double bottom, and you could also look at this shorter pattern over here as being more of the truer double bottom, where you have this first leg down, and then like you have the second leg undercutting that, and then it breaks out and starts to work. So slice it up whichever way you want, but I think that when you start to see smaller patterns within larger patterns, it's something that helps things work a little bit more, because if you have somebody that's on a much longer term time frame looking at this and sees this double bottom, and somebody else that is a little bit more shorter term and they see this double bottom, then you have the pattern working in two ways. And it starts to work on the breakout over here. This is the shorter term one, right? So let's just make that blue. And then this one over here as the middle of the W, make that one red. And so that's where the breakouts are happening. And so you see this pullback over here, it's pulling back to this pivot over here. It kind of undercuts it a little bit, but starts to get support off that, off the that 40-week line. And if it breaks out over here, you've got to expect it to pull in further as well, because you're playing a much bigger pattern. And even over here too, it breaks out of this, it can pull back towards the pivot, and you give it that room, and in this case it worked, and you're off to the races. Looking at the daily chart, let's zoom in, hopefully eliminate a little bit of the choppiness over here. Here you could still see too that you get that 1, 2, 3 move over here, right? So there's the first leg down, you get that second leg down, and then it starts to break out. And as I'm looking at this, this is interesting over here too. Look at this bar right here, right? Actually, that volume, and then like it reverses over here, and volume is a little bit lighter too, right? So it's reversing, it's coming off that low on that day and reversing higher, and then starts to work its way up, and you can see that the volume is kind of light on that right side. So it could be that's how the market likes to fool you too, and that's also why it's important to look at the volume on not just the daily chart, but also on the weekly chart, and to favor those weekly charts more, because it's giving you a bigger picture. So if we come over here and we look at that same reversal week that we saw over here, where volume was light and it's starting to come up, well, on the weekly chart volume was much heavier, and it closed near the top of the range for the entire week. So that's Google, that's its double bottom. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions on anything I spoke about at all, please leave it in the comment section below, and I will personally help you. Also, if you like this video, you always got to click that thumbs up button. That's going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.